BHP Billiton have announced a series of mergers and acquisitions which include the purchase of US natural oil and gas producer Hot Energy and HWE Mining.
BHP Billiton market cap 478 billion, price earnings 7.4, dividend yield 3.14. And let's get the disclaimer out the way right up front. I happen to own all the stocks we're talking about tonight. That wasn't the intention of the show. But Chris, let's come to you first. Referrer mentioned deals. There was a while there where they were saying, oh, can't do a deal. Can't, you know, the Rio Tinto failed. Good thing, top of the market. Potash, I think, would have been a great deal, but didn't work. But they're doing a couple of little ones. The Hot Energy, 12 billion, not so little, I suppose. They announced a coal mine one today in Colombia for $500 million. I suppose they can't do the big one, do some little ones instead in strategic places.
Yeah. And look, that's what Marius Kloppers said when they did the teleconference a few months ago, that the big ones are probably going to be out of reach for a variety of reasons. You know, when you're in a market that is dominated and dictated by huge demand coming from places like China, for example, you're going to get companies like Potash saying, no, whoa, hold on, we can actually do better than that. So I think maybe if we start seeing a cooling in demand for certain of these commodities, maybe the big ones will come into prominence again. But for the time being, you're quite right. Hot, it's not such a small one, 12 billion. I mean, that's
as I was saying,
actually quite chunky.
That could be a good bonus.
Yeah.
Now, Simon mentioned that Marius Kloppers has been accused of not being able to secure any big deals. Now, a man who's not able to secure big deals, walking away with a 4% increase in his salary. And that's for someone who's coming off a relatively high base. And given the spate of strikes in the country, is that going to be perceived as being unsympathetic, especially with our unionist friends?
When you say only 4%, I mean, it's, yeah, you've got to put it in context here. He is well paid. Look, I think Kloppers is very cognizant of the fact that he is monitored continuously by his shareholders, by his peers. And yes, look, you look at this guy, he's in his, his early 40s, he's really trying to make a big statement. And yeah, look, I mean, I think at some point in time, in the not too distant future, as I said earlier, I think some of those big acquisitions will reappear. But in the meantime, you know, this company's got a tremendous balance sheet. It has got, it's got fantastic opportunities, I think, coming up from an organic perspective. And I think Kloppers is going to look very good fairly shortly. I think those three things that you mentioned, the three opportunities that didn't come to fruition, really were due more to extraneous factors than anything else. He tried pretty hard.
Paolo, let's bring you in here. I mean, one of them that they're talking the deals and the like, well, what we are seeing with BHP Billiton, I mean, they're sitting on earnings of around 30 Rand. In 2008, they did 15 Rand. Back then, share price was 300. Now it's 220 odd, like that. The market is just saying, you know, we don't believe something about it. Either that demand is going to completely collapse or something. The market's looking at this and saying, no.
Yeah, while the market's concerned, obviously the European situation's come out. You probably could argue the risk of a recession in the Western world comes back on the table. And of course, Billiton listed overseas as well. So there is this concern playing directly on their share price. It may well, however, if you believe the Western world can get it together, it may well present a fantastic buying opportunity if you still believe in the Chinese story, the emerging market story, and that will continue to grow. In that case, of course, this will offer opportunity. And the company itself, while we mentioned the deal is not small, but it also positions, if you look at the structure of the company, quite nicely. So it starts to build up this energy side of its portfolio, which, if you think of, you know, the future, that's probably quite a strategic space to be in. We're quite comfortable with that, not only with Billiton playing in there, but even Sasol playing in this new space. If
we take double-dip recessions, let's say they happen, and if we take sovereign debt in the EU and say it is going to get ugly and we might even get a default, still looking at Billiton on a PE of 7.5, which is what I think it's been in that levels twice in the last decade. With a 5-year outlook, you've got to say that even with some bad things happening out there over a 5-year time horizon, this thing's got to be a steal.
Yeah, I would tend to go along with that. I think even if you take the Western world issues that might take a year or two to resolve, and no doubt there's very little, if any, growth coming out of Europe and supporting this, it's not falling off the table. You know, we're still talking of US holding it together, finding traction, Europe, you know, maybe a recession coming through, but not enough to derail the global economy. At least that's not our base case scenario. And so the demand picture will still be favorable for a company like Billiton. I think it does in that sense, represent an opportunity to pick up some stock. Yeah.
Chris, Paolo mentioning the dynamics between emerging markets and developed economies, but the company doesn't believe in active currency hedging, which seems a bit strange for me given their emerging markets exposure and the fact that their operating costs are going to be influenced by the currencies in which they operate. Is this a strategy that's likely to change going forward? Would they look into active currency hedging?
Yeah, look, it's a good point. I mean, there's a lot of companies around who have been into active currency hedging and have burned their fingers very, very badly, and have got out of it and have unwound their positions. So, you know, you've got to take the view. I mean, look, a company of this size, at some point in time, has to look at that possibility. But, you know, it's not like it's for free. There are certain costs involved here. So, and when you're dealing in those kind of big numbers, yeah, I don't know. It's something I think that they will re-examine from time to time.
Paolo, you mentioned energy. I mean, one of the things I've always liked about Billiton is that diversification, both within different commodities and also geographically. You know, at the moment it's all about iron ore, but their base metals are almost 20%. They've got petroleum, they've got a fair bit of coal. And I suppose that also, you know, iron ore might now fall off the cliff over the next couple of years, and we might then see the energy coal picking up, or stainless steel or something like that.
Quite tricky that, I guess, because, you know, if iron ore is going to be falling off the table, then most likely the oil price will soften as well, because that would imply some softness in the global economy. Interesting, however, to note is in this last bit of turmoil we had, many of the commodities have come off, but iron ore has actually held together. It's priced quite well. So it's been a right commodity. I mean, look, they doubled their earnings in that space over the last while, so it's been fantastic. But it's really, as you say, it's copper, it's iron ore, and it's energy. I mean, that's the bulk of its play at the moment, which, you know, position it well, I think, going forward, but it does give that diversification, as you say. The one benefit from its positioning is, just bear in mind, obviously commodities, if the dollar weakens over time, commodity prices might show some strength, which will compensate some of their costs being in some of these emerging market currencies, which one might argue going forward, those are the strong economies, and one might even reflect that the Australian dollar, and it's done fairly well over a while, so their cost base is picking up, of course, which, you know, just reflects back to whether they currency hedge or not. But the compensating on the one side is if the dollar weakens, and of course that metal price theoretically should pick up and compensate a bit for that increased cost level. But it is a risk to this company. I mean, the cost levels will start to creep in, we think.
And given the risk, Paolo, do you think that it is a hot stock or not then?
Yes, it's my hot stock.
It's your hot stock, clearly. What about you, Chris? Hot or not, BHP Billiton?
It's very, very hot. We've held this as a core holding in our portfolio for a long time, and we have no qualms about this one at all. It's very hot.
Too hot. Simon Brown, you hold the stock. No prizes for guessing what your pick is.
I think it's a hot. I'm with Chris. It's a core holding, and I think you want to buy great companies at great prices. And I'm not saying it won't go lower, but I'm saying that the price you're paying right now, this is a great company and it's a great price. Price earnings are 7.5. Heck, I mean, it might go lower, but at 7.5, you're going to be telling your kids about this in 10 years' time. And I bought Billiton and such and such. It's great. It's hot.
3 hots here in studio. Moving on to Kumba Iron Ore. Kumba Iron Ore plans to pay about 500,000 rands to 6,140 employees who have participated in the share option scheme. The company is also ramping up its Kolomela mine in the Northern Cape as global iron ore prices hit all-time highs of $173 per tonne.
Kumba Iron Ore market cap of 140 billion, price earnings of 8.3, dividend yield of 9.77. I'm going to call it 10%. Chris, it's a dividend yield, and again, back to the Billiton, you look at that dividend yield and you say the market is saying iron ore can't hold up. There was an article I saw today at Bloomberg News, 10 analysts, which is not exactly a quorum. They're saying they're looking for the price to come down from the current 173 to maybe as low as 123 in 2015. But to Paolo's point a moment ago, iron ore prices held up in all of the trouble we've seen.
Yeah. And to put that in perspective, that's an awful lot more than they're currently getting. Okay, there's an historical reason for that. But nevertheless, you know, I hear this all the time from a lot of skeptical analysts that, and it's a reasonable basic economic theory that the higher the price of a commodity goes, the more likely it is you're going to attract new competitors into the market, and prices are going to come down.
Increase.
Yeah, I think what they fail to take into account though is, like with oil, getting a new iron ore pit up and running is a long and expensive process. So this isn't going to happen overnight. It's going to take a long, long time. And in the meantime, you know, when you get a globally competitive performer, a competitor like Kumba, you know, doing what it's doing, We reckon it's going to stay like this for quite some time.
Yeah, but you say it's going to take some time. I mean, the point is, I mean, with soft commodities, with wheat, it's easy. Demand comes next year, farmer plants wheat. With iron ore, yeah, it's going to take years, 3, 4, 5, 6 years. At some point down the line, whether we're going to start to see it hit, but certainly you're saying we've got a window which could be 3, 5 years before that comes through,
could be
maybe
even
longer.
You know, even longer than that. It's long enough to make it a reasonable prospect not to get overly concerned about that aspect of the dynamics at this point in time.
Paolo, looking specifically at government's target as far as the mining charter is concerned, to have it black-owned, 26% black-owned by the year 2014. The concern around this employee share option is that it's really a phantom share scheme, and it's not going to result in a major change in the issued share capital of Kumba. So why would they participate, number one? And secondly, why would they opt to take cash instead of holding on to Kumba shares going forward? It would do nothing towards heading us towards the target of 2014.
Yeah, look, I guess Kumba, in its own sense, will have to do an empowerment deal that structurally changes the ownership. At the moment, it's really one controlling shareholder, and that's potentially even partially behind the big dividend outflows that you see. I mean, the controlling
wants the cash flow.
Wants the cash flow. But in principle, they're most likely, I think, going down. I mean, obviously, I can't speak on their behalf, but it seems logical to me that they will engage in a more meaningful empowerment partner or program to lock in the shareholders, so you know, for the future, and to reach that shareholder.
Before we were talking about Billiton, they've got some iron ore now, particularly Kumba obviously is all about iron ore, most of it going into China. This is a story about, does the China demand continue? I mean, there's demand in Europe and North America, but really it's the China story.
Yeah, so they've got a lot of iron ore, as you said. That's all they got.
They do have a lot of it. They do 45 odd million tons a year.
And they're going to get a little bit more because of their mine. It's got a tricky name,
Kolomela.
Yeah. And that is going to start producing in about 2013, and when it gets to full production or so, it's probably going to contribute 20 to 25% of earnings. So it's quite a big chunky expansion. And obviously you're picking up this dividend yield, which I don't think is seriously at risk in any way. So it's really attractive. But then, as opposed to Billiton, you're taking a single commodity bet on this thing. And you know you're going to be paid for that right now, of course, but it can turn against you.
Single commodity risk is great when it's the commodities really happening. When it's not so much so, you want those Maurice Kloppers or Cynthia Carrolls to manage that risk for you in a sense.
Yeah, absolutely, because you've got the diversification on the other side. Yeah.
What we are also seeing, you mentioned the Kolomela mine, I mean, and to Chris's point, Chris, let's bring it back to you, they're targeting 70 million tonnes per annum iron ore by 2019. They're currently in about 45. That's a way off, but that's a 50% increase. So assuming, you know, no currency changes, etc., this thing starts to run at a 15 dividend yield, okay, number of years away, but I mean, the numbers just actually get bigger and bigger, unless China goes to 2% growth.
Yeah. Which I don't think it's going to happen for a variety of reasons, but that's a whole other subject. You know, I went to a presentation that Kumba organised by an American consultant back in March, April this year, and it was quite interesting to look at the fact that Kumba's diametrically opposed in its outlook as to what is going to happen regarding iron ore. I mean, the government, DTI, are looking at taking iron ore and beneficiating it further down the track, reckoning that that's going to create jobs and the like. Whereas Kumba actually shows you quite categorically that in terms of South Africa's growth prospects, it's far better to actually concentrate on iron ore in the areas that they're looking at, and there's going to be far greater potential from so many other perspectives that I think they really know precisely where they're going. And you're quite right. I think in the not too distant future, this is going to provided all other things remaining equal, we're going to see even better things coming out of Kumba.
Paolo, a little bit of controversy around the government rewarding mineral rights to ICT, Imperial Crown, for the Sishen mine in the Northern Cape. How far is that process, and how big is the risk to Kumba?
Well, that process still has a huge way to go. I think we're right in the middle of a very complicated situation. Certainly we can't see any clear resolution to this right now. My gut feel, though, is there's going to be a little bit of a loss to Kumba. They will give away something, I think. And vice versa. I think ultimately you're going to find that it's going to make sense for these parties to get together and make some agreement, but it's going to be midway point, I would imagine. But we have no resolution of that at the end. It will take some time, of course.
Someone was saying to me 2012 for resolution. Is that feasible or optimistic?
No, I think it's feasible. It might be on the side of optimistic, but it's feasible.
And it might be December 2012.
And look, it's in their interest, of course, to get this thing resolved.
And your view on Kumba then, hot or not?
Yeah, we're hot on it, and hopefully the Saldanha Sishen railway lines can continue with the growth that the mine can produce, because that's going to be the restricting factor in our view. Yeah.
Hot for Paolo. How about you, Chris? Hot or not?
Yep, it's also hot for us. Look, it's not quite as hot as BHP Billiton, I don't think. Again, coming back to what Paolo was saying, you've got this single commodity risk, and you've also got the risk related to ArcelorMittal. But over and above that, the things look so good that provided we don't get any too much from left field, then this one does look hot.
Two hots. Simon?
I mean, it's just getting a little bit boring. It's hot. Operating margin at 70%, dividend yield of almost 10. I agree with Chris and Paolo. Perhaps Billiton just edges it, but it's a stock I have in my portfolio, and I have it primarily because I believe the China story. I think the extra demand or supply is going to take a while to get to us, and a stock that pays me 10% to hold it, I want to hold it. Lots of it.